Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So quite an interesting month we've had so far in the markets, right? We've got the consumer price index, the inflation metric for US and Canada, both come in lower than expected, showing some softness in inflation. Although if you look at the shelter component, it's still sticking around there. Yes, Canada has done only one rate cut. US has yet to do a rate cut, but we're seeing that inflation number come down lower and lower. However, shelter component's still up there. When you look at the food prices as well, it's still sticking around up there as well. But other areas like transportation, vehicles, especially vehicles, if you're out there looking for cars out in the market, those prices are starting to come up. We're starting to see repos for autos go up drastically as well. So that's bringing in more of that supply and those prices to come down. Another interesting thing is that we're seeing inventory, housing inventory start to creep up higher and higher. Canada and US as well, especially as inflation, has been, according to the numbers, has been coming down. Now, where does this leave in terms of rate cuts for the U.S.? Are we going to see a rate cut this coming meeting, end of the month in July? Right, we have the U.S. Federal Reserve coming out. Will we see the Fed do a rate cut, or will they finally signal, if not, a rate cut to come very soon? Now, the markets out there are somewhat, and the traders out there are somewhat pricing in that we're probably not going to see a rate cut the end of this month, but it's likely we're going to see it in September and then December. So we could see the US actually cut rates finally, and the rate cut cycle finally start in September. However, we did hear from certain federal Fed members, especially today, say that, hey, we are inching towards a rate cut. We do see a rate cut happening this year. In terms of the July meeting, probably unlikely, but we have enough months before the September meeting, enough data to see before the September meeting if we want to do a rate cut or not. Now, they didn't come out and pencil in that, hey, we're 100% going to do this. They didn't commit to anything. We have been hearing from the Fed and from Powell's tell us that as well, that they're not going to jump the gun very, very quickly. But if the data is looking good in terms in their views, in terms of inflation, then we can definitely see a rate cut coming sooner than later, and definitely a rate cut to happen this year. The only question is, are we going to see it September and December, or are we going to see it once, just maybe in December, or nothing at all? Anything can change. Anything's game here, and especially with the Fed, we've seen the Fed flip-flop so much this year, last year, the year before. We've seen the Fed always get it wrong, which they have a beautiful track record of getting things wrong often. So that's going to be the question, and that's what we want to see in the July meeting. Do they hint towards a rate cut in September, give the markets more of that that push higher, that yes, and that optimism that yes, rate cuts are coming and we're going to start the rate cut cycle finally starting December. So we will see then, although the markets are and the traders are out there anticipating a higher than 50-60% chance of some sort of rate cut in September. Again, it's going to be all data dependent. We're going to have to see, next month's data and the commentary that comes out from the Fed as well. Now, along with all of this, we're going to expect some volatility in the markets and stocks as well, right? Especially with elections coming up in the U.S., right? You can see, especially already, the craziness that's happening, especially with the Trump shooting that happened recently, right? So you can expect probably some volatility to come in as we head to September, as September goes on. That will be very interesting for the markets as well. Another thing to point out is let's not forget about the yield curve, right? The yield curve has been inverted for a very long time, and usually when that happens, it tends to signal some sort of recession, right? We're seeing inflation come down because demand is weakening. We've heard from companies out there, fire workers talk about that in the future. Spending is going to be less. Consumer spending is deteriorating because the demand is getting weaker, right? We've heard from companies out there also talk about how, not only the demand is getting weaker, but their cost and the profit margins being affected. So in order to make those better, what are they doing? They're going out there and they're laying off workers, right, in order to make their earnings look better. So it's going to be interesting because next week we're going to get a couple of big tech names. We're going to get earnings there as well, and it'll be interesting to see what tech firms have to say in terms of their forecast down the road, right? The other thing, going back to what I was saying about the yield curve, right? We're seeing it slowly uninvert. It hasn't fully uninverted yet, but it's been in that negative territory for some time. So when we start to get those rate cuts, we will start to see that yield curve slowly unwind and uninvert. And when you look at history, we tend to see the stock market and equities kind of sell off during elections time. So it'll be interesting to see how the equity markets play out in September. Do we see a 10%, 15% correction, especially in NASDAQ, because it's been going up and up and up and up and from, you could argue from a valuation point of view that the equity markets are overly priced. That's why we're seeing in the equity markets today rotation away from those big high-flying tech stocks into more of the Dow. And you see the Dow kind of performing better than NASDAQ. So a lot of variables heading into September, heading into the end of the year as well. Lot of things to consider, and let's not forget this inflation metric that is deteriorating and that is showing signs that it's getting better. It's not simply because the economy is doing amazing and prices are coming down. It's because there's a demand problem. And if there's a demand problem, that means people are spending less, and people are spending less, and they're getting repoed on their cars, and the credit card debt is skyrocketing, and they're spending less. Then guess what companies are going to do? Lay off workers. Hence leads us to that jobs report, which we also saw in the beginning of the month, right? We saw that unemployment rate move up. So that's going to also be key heading into the coming months, right? Does the unemployment rate move up further, higher and higher? Does the initial jobless claims number get worse off, causing the Fed to step in? Because let's not forget one more thing, right? Even if the Fed doesn't get their 2% target quite exactly, they've mentioned to us that they can cut rates if they feel the job market is in trouble. So they can do that beforehand. And generally, that coincides many times. If you look at the past history, when you see the unemployment rate move up, especially you hit that SOM rule, and it moves up, 0.5% above the 3-month average, being 0.5% above its 1-year low. We've always seen that rule basically tell us that we are in a recession. And when that happens, we tend to see the unemployment rate move up further, and then eventually skyrocket, causing those emergency rate cuts. Lots to consider, right? I haven't even talked about the commercial real estate issue also that's there. I've mentioned in my previous videos, but all of these things are starting to slowly add up and show up, and it's starting to bring possible chances of the starting of the rate cut cycle in September. because of that weak demand, because of uncertainty, political, issues that are happening, elections, volatility in the markets, and what have you, right? And many other risks out there. So let me know what you guys think. Do you think we're going to get a rate cut? Do you think the U.S. is going to get a rate cut in September? Are we going to see 2 rate cuts for the year? Are we going to see some emergency rate cuts or not? What do you guys think? Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers. Bye.